Hey everybody, Johnny Sewell from Acorn Wealth, and it's Executive Summary time. So, we talked on our Executive Summary on Tuesday about the Dow Jones Global Index leading the way for where the US markets would go. We talked about the fact that the the Dow Jones Global had broken the open range and continued higher for 2 days, and that we were seeing the same thing on the S&P, and we would expect it to reflect whatever happened in the Dow Jones, and it did. So, our crystal ball was right. We had the same kind of topping candle, and the last 2 days have been up also. So if we go by that, that means we should have 2 more up days in the S&P, at least. Now, what I'd be cautious of is this downtrend line here. So I'd be looking for resistance to come in around 2105 on the S&P 500, and that's where I start to get nervous. But in the meantime, longs are still in play. And that's why I'd firstly start to look at PLX as a potential on the watch list. Now, it started to show topping tendencies, so I expect this to pull back. And therefore, I'm looking at an entry point at 203. It closed at 208 today. But if you see, the money flow down below is quite positive. And if we look at the hourly chart, you can see that 203 gives it just a pullback to where that major surge came from. And with a 203 entry, I'd be looking at a 217 target, just slightly below the high of this candle, 217, 216, and a stop at 194. Okay, next on the long watch list is DGLY. DGLY, again, similar. It's a basically a police camera system that's been surging on news of the recent murders in the US, and this one's got some gas. But it really needs to, but it's a breakout story. Now, based on risk-reward, the ideal scenario here is a pullback, in my opinion, to 1552. That would allow us to put a stop loss just underneath this support line, or the low of this previous candle, at 1502. And based on the Fibonacci extension levels, I would be looking at a target of 1677 as a first target, and 1733 as a second target. And that's basically how I'm reading that. It's still consolidating, but the money flow is staying positive and has made new highs. So DGLY is one of those flag formation continuation patterns that we're looking at. So again, looking at a target of 1677 and 1733, entry point at 1552 with a stop at 1502. Now we take ourselves to the last long on the list. It's NEON. And NEON has just broken positive on money flow, which has been basically overcoming a drag down it's been having for a while. Now, it's had a strong rally with 1.5 million shares yesterday versus 242,000 shares the day before. So this is a strong breakout. It continued with 924,000 shares today. So I'd still be looking for a pullback. Looking for a pullback to around 367. And after that, a rally up to 427 is what I'm looking for. In terms of the stop loss, I'd be using $3.43 as a stop, which is just underneath, obviously, where this kind of support level comes from, right here. Looking at that extreme level of the breakdown and these highs of these candles. Okay, on the short side, IGTE. IGTE's got major insider selling. It's got negative money flow. These guys report, I believe, on May 5th. So this could be a possible options play. But in terms of a stock play, I'd be looking for a breakdown below $40.62 with a target of first target of $38.63. And a second target of 34.37. The main concern here is all these moving averages clustering around each other. But as we can see, this stock has rarely respected those and is generally moving in an oscillating standpoint, mostly respecting the 9 and the 5-day exponential, nothing really else. So these would normally concern me, but given the personality of the stock, it's not so much of a problem. So therefore, I'd be looking at a second target of 34.37, which is where around that oscillating bounce has happened from before. So possible option play or stock play with earnings coming up. EW reports on April 23rd. They've got huge insider selling from the CEO and other guys. It's a biotech company. You wouldn't expect that in a market where the biotechs have been doing so well that the insiders would be selling so heavily. So this is something we're interested in, and also it's a descending triangle formation, which of course is a bearish pattern. So if we have the breakdown, I'd be looking at an extension of this pattern to come down to this level here, which is also where the moving averages are coming up to. So for EW, it could be a great options play. So something like a 135 puts, for example, May 135 puts. And I'd be looking for a break of 136.63 with a target of 126.17. And my stop loss on that would be put at 141.52. And last but not least, SBH, Sally Beauty Holdings. This company has obviously done very poorly in a good market and has broken down through support. This is obviously in the retail sector, but I'd be looking at a break here of, or an entry point rather, of 33.07 with a target of 31.40. And a stop loss at 33.97, and that would basically bring us down. This is looks like a momentum-based system. You can see the money flow is really diving, and that's reminiscent from all these candles back here, which have been closing in the bottom of the range. Very toppy action, and with the market the way it is, this should have done much better if it was a healthy stock. So what could it be doing if we have a downwards market? But with also the huge inside selling since 2010 almost every month, you got to wonder why. And that is your executive summary for tonight. If you haven't already tried our executive summary service for every night out, go to acornwealthcorp.com and click on Contact Us and request a trial. We'd love to help you out. With that, we'll see you all soon.